Obviously, the House plan is gone for a vote next week. The Senate plan is just out. There's a markup to go. Which plan will the end result most resemble?
Yeah, that is not knowable yet, but my guess is there will be elements of each. But, you know, I think the important thing is that the big fundamental things are really the same. These bills have the same architecture in the sense that, as OMB Director Mulvaney pointed out, right, there's direct tax relief for middle-income families on the one hand, on the individual side, together with some movement towards simplicity. And on the business side, we've got the same big policy change, right? Dramatic reduction in the corporate rate from 35 to 20, allowing for full expensing immediately of capital expenditures, which is really good policy, and moving to a territorial system for the international part.
Philosophically, there might be some similarity, but when it gets to the actual details, there's massive differences. Take the SALT deductions, for example.
Yeah.
You know, on the Senate side of things, full repeal.
Right.
Some Republicans in the House don't want a full repeal.
Yeah, but even there, I would suggest there's a lot of overlap, right? So we completely disallow the deduction for all state and local taxes. The House does the same thing, except there's a carve-out for up to $10,000 in property tax deductions. So that's the difference. We're going to haggle over that, and we'll figure out a way to resolve that.
Is there some wiggle room? You're from a state that it would potentially punish quite a bit, and that might be a swing state in the midterms.
Yeah, the Pennsylvanians on the House Ways and Means Committee voted for this bill in the House, and I'm supporting it because it's good for Pennsylvania on balance. And it's a good policy to get rid of the state and local tax deduction. I mean, let's be honest. It's a mechanism by which federal taxpayers subsidize high-tax jurisdictions. That's not good policy. So we're going to move away from that. But again, there are some differences, absolutely, but they're not wide chasms. We're going to be able to bridge those.
Will the Senate bill address carried interest? Senator Grassley says yes in an amendment.
So the text we have now does not. But the committee is going to work its will, and then the Senate floor will work its will. And so I expect there will be amendments, and I expect that some amendment to make some changes in the current policy on carried interest will probably prevail. So my guess is by the time this is over, there will be a change in the policy.
The mortgage interest deduction stays, so does the estate tax in the Senate.
Well, so the mortgage deduction remains, and it remains with a cap of $1 million. The House takes that down to $500,000, so we're going to have a discussion about that, and we'll work that out. The estate tax, we both take the same initial step, which is to double the exempted amount. So an individual will be able to be completely exempt from the estate tax on $11 million, a couple $22 million. But beyond that, we leave the policy for the duration, whereas the House does repeal it over time.